You've long written that there's no obvious catalyst for multiple expansion on this name. What do you think's going on?
I think it's a confluence of things, and I think many investors have been surprised at the magnitude of the recent run. You know, there's increasing anticipation and speculation about some kind of VR or AR headset over the next year or so for Apple. There's excitement about a potential Apple car over time. And I think we've been in an uncertain stock market and, macro environment. And people turn to Apple as a stock in those cases because they believe that the company has durable free cash flow. So I think collectively, all of those things have been helpful to the stock.
So is that self-fulfilling? Does it get you off of your neutral stance? Or do you think this in time does correct?
I think we are in a self-fulfilling zone for Apple stock right now. We've seen it. We've seen options activity quite high. It's been in many consumer forums as sort of an actively traded or actively, espoused stock. So I think we are seeing a little bit of momentum begetting momentum. I think the real question is, much like we entered 2021, where Apple's multiple was north of 30 times earnings, the stock had a pause for the first half of this year as investors kind of digested that valuation. And I think, that's our contention is, sure, over the next few weeks, potentially through $3 trillion, there could be continued momentum in the name. But Apple, a year ago traded at north of 30 times earnings, and despite really strong results, underperformed for the first half of 2021. I think there's a risk that may also happen going forward.
So what do you think are the catalysts, or maybe I should say risks, that could pull the stock down or that could give people further confidence in what Apple can do going forward?
Sure, John. I think one of the things we haven't talked about, which there's been mixed messages on, is the strength of this iPhone cycle, both in terms of how many units Apple can actually deliver in Q4, but also, what is Apple's characterization of demand for this cycle, because there's obviously a supply issue, but there's also a demand question. So that will definitely shape investor sentiment. If this ultimately is a strong cycle, most investors are thinking for iPhone revenues to be about flat. If it was notably better or worse than that, that's going to be the most immediate driver of Apple stock over the next 60 to 90 days.
Tony, good morning. It's Deirdre. Looking further out, you believe that AR and extended reality could actually be cannibalistic to the iPhone if these sort of devices actually replace the smartphone. But are you sort of counting Apple out in terms of building the hardware and operating system for such devices?
I think we're pretty optimistic on what AR, XR devices can do over time. And our belief is that, at least initially, the devices will likely be accretive to Apple's existing businesses. I do think over time, if the functionality of an AR, VR, XR device is ultimately, really enhanced, and the form factor is one that's attractive and easy to deploy, think about, something like glasses, if ultimately that will form factor 5 or 8 or 10 years from now. And there is certainly a risk that those devices could cannibalize existing smartphones or tablets. It could be your primary access device to the web. And right now, your primary access device to the web is your phone. But ultimately, if we get to the point where the functionality and form factor of some kind of wearable allows you to access the web in a much richer and arguably equally facile or more facile way, sure, I think there's cannibalization that could exist. But in the near term, probably the next 3 to 5 years, I would expect it to be largely accretive.